Hello learners, greetings of the day. I'm Dr. Dwisha Shah, your trainer. Today's topic is auditing and accounting. Let's begin with the session. Here is the overview of today's session. We will understand meaning and definition of forensic audit and their practices as a forensic auditor, followed by a case scenario. We will also know what forensic accounting means and defined, forensic accountant practices, and case scenario. At last, we will understand the differentiate between auditing and accounting. Let us all know first what audit means. The word audit is derived from a Latin word audere, which means to hear. During the medieval times, when manual bookkeeping was prevalent, auditors in Britain used to hear the accounts, read out for them, and check that the organization's person were not negligent or fraudulent. Audit in general refers to the examination or inspection of various books of accounts by an auditor, followed by physical checking of inventory to make sure that all departments are working and recording the transactions. It is done to ascertain the accuracy of financial statements provided by the organization. An audit is a systematic and independent examination of books, accounts, statutory records, documents, and vouchers of an organization to ascertain how far the financial statements as well as non-financial disclosures present a truth and fair view of the concern. Audit can be done internally by employees or head of a particular department and externally by an outside firm or an independent auditor. The idea is to check and verify the accounts by an independent authority to ensure that all the books of accounts are made in a fair manner and yes, no misrepresentation or fraud that has been conducted. Now let us know what forensic audit means. As per the definition given by the Investopedia, forensic audit is an examination and evaluation of a firm's or individual's financial information for use as an evidence in the court. A forensic audit can be conducted in order to prosecute a party for fraud, embezzlement, or other financial claims. In addition, an audit may be conducted to determine negligence or even to determine how much spousal or child support an individual will have to pay. A forensic audit is an examination and evaluation of a firm's or individual's financial record. During a forensic audit, an auditor seeks to derive evidence that could potentially be used in the court. Audit is used to uncover criminal behavior such as fraud or embezzlement. When you are a forensic auditor, you specialize in a particular brand of accounting. Smaller firms may not have a forensic auditor on the payroll, but most large and commercial accounting firms have forensic auditing department. There are many definitions to understand forensic audit which are given by various experts. Jack Bologna and Robert define forensic audit as the application of financial skill and an investigative mentality of an unresolved issues conducted within the context of the rules of evidence. As a discipline, it encompasses financial expertise, fraud knowledge, and a strong knowledge and understanding of the business reality and the working of the legal system. Business Dictionary defines forensic audit as the application of accounting methods to the tracking and collection of forensic evidence, usually for investigation and prosecution of criminal acts such as embezzlement or fraud. Forensic audit dig deep into the why and how behind irregularities. The key purposes include: number 1, detecting and preventing fraud through data and pattern analysis. Number 2, quantifying losses from fraudulent activities or disputes. Third, gathering court admissible evidences. Fourth, supporting litigation through expert testimony and analysis. Fifth, reconstructing financial events to determine responsibility. Sixth, forensic auditor act as financial detectives, tracing money flows and reconstructing events using advanced and analytical and technological tools. Forensic audit are conducted by skilled forensic auditor who combine their knowledge of accounting and auditing with investigative skills to dig deep into financial statements, records, transactions, and internal controls. These auditors are the detectives of financial world. Their task with conducting forensic investigations into complex financial landscape to uncover hidden truths. Now going to the significance of forensic audit. In forensic audit, specific procedures are carried out in order to produce evidence. Forensic auditing procedures target mostly financial and operational fraud, discovery of hidden assets, and adherence to federal regulation. Audit techniques and procedures are used to identify and to gather evidence to prove to support other issues which would be relevant in the event of court case. Forensic audits also recommend improvements to internal controls and procedures to prevent future instances of fraud. By identifying the weaknesses in financial systems and control, organizations can take proactive steps to strengthen their defenses against fraud and misconduct. For example, how long have fraudulent activities existed and carried out in the organization, and how it was conducted and concealed by the perpetrator. Now, let us understand the forensic auditor practices. The exact audit process varies based on your objective. The objective lies with the questionnaires like: what type of issues are you trying to uncover? What concerns do you have about the business's financial records? Do you want to target a specific time frame? Now, those are the first questions to be considered. Following are the step-by-step process of the forensic audit. Number 1, planning and defining the scope, where we identify the focus area, objectives and timelines. Legal and data access permissions are secured. Second, we go for the evidence collection, where we maintain the chain of custody, extract and preserve physical and digital data like email, server, ledgers, mobile devices, and so on. Third, data analysis. We do this by the use of various tools which are used for tracing the transactions. Fourth, interviews and collaborations. Interview the key staff, vendors, management to cross-verify the findings. Report and presentation. Now we prepare the court-ready reports detailing the methodology, evidence, and recommendations. Now let us understand each step further. Number 1, planning the investigation. During the planning stage, the forensic auditor and team will plan their investigation to achieve objectives such as identify what fraud, if any, is been carried out. We determine the period during which the fraud occurred, discover how the fraud was concealed, naming the perpetrator of the fraud, quantifying the loss suffered as a result of the fraud, gathering relevant evidence that is admissible in the court, suggesting measures to prevent such fraud from occurring in the future. The second step goes collecting the evidence. Collecting evidence. Now this is the meat and potato of the audit. This is when the auditor takes an in-depth look at the company's financial record. The evidence collected should be adequate to prove the fraudster's identity in the court, reveal the fraud scheme's details, and document the financial loss suffered and the parties affected by the fraud. A logical flow of the evidence will help the court in understanding the fraud and the evidence presented. Forensic auditors are required to make precautions to ensure that documents and other evidence collected are not damaged or altered by anyone. They are trying to uncover what happened, identify who did it, and yes, determine how much was the lost. Next, reporting the audit result. Once the auditor has learned as much as possible about the situation through an exhaustive analysis of business's record, they are ready to make their report. A forensic audit requires a written report about the fraud to be presented to the client to proceed to file a legal case, if they so desire. At a minimum, the report should include findings of the investigation, summary of the evidence collected, explanation of how the fraud was perpetrated, suggestions for preventing similar frauds in future, such as improving internal controls. If necessary, they can advise the subject of the audit whether or not they should file legal charges. Next, court proceedings. The auditor will create report for the court. If the case goes to the trial, the forensic auditor may be called to testify an expert witness. The auditor will explain the findings, walk through complex accounting issues, and ensure that the evidence is clear to the court and any non-expert individuals involved in the case. Now let us look into a fictional yet highly instructive case that illustrates how corporate fraud can occur, and more importantly, how it can be uncovered. Our case centers around a computer manufacturer called Visi Kids and a chip supplier named SmartChip. It's a fictional computer manufacturer looking to secure a new supply for its processor. On the recommendation of its chief financial officer, CFO, the company entered into a contract with the SmartChip. At first glance, this seems like a routine business decision. At the time of contract was signed, the SmartChip was not legally authorized to conduct business. Its license had been indefinitely revoked due to irregularities in a recent IRS filing. This means that any contract signed with them was not only at risk, it was potentially void. Now, this is where the ethical breach comes clear. The CFO of Vinci Kids was fully aware that SmartChip's license had been suspended. Despite this, they still pushed for the contract. Why? Because the CFO was secretly receiving compensation from the SmartChip, a classic case of a conflict of interest. A conflict of interest occurs when a person in a position of a trust, like here a CFO, has competed personal interest that could interfere with their personal and professional duties. In this case, the CFO's duty was to act in the best interest of the Vinci Kids, but instead they act in their own interest, comprising the integrity of the company's decision-making process. Now, many people believe forensic accounting and fraud auditing are synonymous, but they are not. Forensic accounting combines accounting, auditing, and investigative skills or techniques to discover financial crimes and assist in legal matters or proceedings. It applies scientific techniques and accounting principles to detect fraudulent activities. It entails an accounting analysis that can reveal possible frauds suited for presenting in court. Accounting analysis produced by the forensic accounting should form the basis of discussion, debate, and dispute resolution. One of the essential functions of accounting is to explain the nature of the financial crime to the court. It involves the detection of application of embezzled funds, asset identification, asset recovery, and due diligence review. Example is scheming fraud. Scheming is an off-book fraud because the cash theft occurred before it was entered into the bookkeeping system. Thus, it is never reported on the company's accounting record. Forensic accounting services generally involve the application of specialized knowledge and investigative skills possessed by the CPAs to collect, analyze, and evaluate evidential matter and to interpret and communicate findings in the courtroom, boardroom, or other legal or administrative venue. There are various other definitions of forensic accounting. But accounting is the investigation of fraud and financial misrepresentation or manipulation by performing extremely detailed research and analysis of financial information. Forensic accounting can be broken into two broad categories: one, investigative auditing, and litigation services. Accounting is utilizing in litigation when quantification of damages is needed. Parties involved in legal dispute uses the quantification to assist in resolving disputes via settlements or court decision. Example, there is a conflict between Alexa, an employee of a Mango Tree, a restaurant chain, due to compensation and benefit disputes. The forensic accountant may work as an expert witness if the disagreement escalates to a court decision. When we talk about investigation form of the forensic accounting, it resolves around criminal or fraud investigation. Example, fraud over salaries, inventories, fixed assets, or cash collection. Now let us understand the practices of a forensic accountant and some common duties. Number one, financial statement analysis, where they scrutinize the financial records to detect anomalies, inconsistency, or manipulations. They identify the red flags such as revenue inflation, expense understatements, or off-sheet balanced items. Second, fraud detection and prevention. By using various tools like fraud triangles to assess risk and implementing internal controls and conducting fraud risk assessment. Number 3, forensic auditing. Conducting detailed audit with a focus on uncovering fraud or misconduct. They often use in corporate investigation, embezzlement cases, or regulatory compliance check. Fourth, digital forensic. Analyzing electronic data like email, spreadsheets, database to trace financial transaction, recovering deleted files, or tracking digital footprints in cybercrime investigation. Fifth, litigation support. Assisting legal teams by preparing financial evidence, expert witness reports, and courtroom testimony. Common in divorce settlements, shareholder disputes, and insurance claims. Sixth, interviewing and interrogation. Conducting structured interviews with suspect witnesses and employees by gathering qualitative insights to support the financial findings. Seventh, document the examination. Accountants verify the authenticity of contracts, invoices, and other financial documents by detecting the forgery, alterations, or any kind of backdating. Eighth, valuation and economic damage assessment. They calculate the loss due to fraud, breach of contract, or business interruption by estimating the fair value in cases of mergers, acquisitions, or disputes. Ninth, regulatory compliance check. They ensure the adherence to financial regulations, anti-money laundering laws, and tax codes by often involving the collaboration with the law enforcement or regulatory bodies. And last is the report writing and presentation. The accountants prepare clear, concise, and legally sound reports for the stakeholders or court. By visualizing the data, through charts and timelines to support the findings. These practices are essential in both private and public sectors by helping the organization maintain the financial integrity and support justice systems worldwide. Now, let us discuss a case scenario to understand the concept of forensic accounting. An embezzlement in a private school. A private school in India noticed a shortfall in its account and annual budget despite stable enrollment and tuition income. A forensic accountant was hired to investigate. The key action taken by the accountant were financial statement analysis by identifying the discrepancies between reported income and bank deposits. They tried to trace the missing fund to unauthorized withdrawals by the finance manager. As a digital forensic, they recovered deleted spreadsheets showing diverted tuition payments. They calculated the embezzlement amount as a loss of quantification of amount rupees 1.2 crore over 2 years. At last, they presented their findings and leading to conviction by partially recovery of the fund as a legal support. Now, after understanding what auditing is and what accounting is, let us understand the key difference between accounting and auditing. As a forensic accounting, the objective and scope lies with the investigation of the financial discrepancies, uncovers fraud, examines financial crimes, and determine who committed fraud, how it occurred, and its impact. Forensic audit will focus on fraud against the business, analyze the specific transactions, misappropriated assets, and disputes with employees, vendors, or customers. The purpose of accounting is to uncover, analyze, and document fraud in financial transactions, provide evidence for legal proceedings. In case of auditors, they detect fraud within specific financial areas or transactions and evaluate whether wrongdoing occurred. Accounting uses methodology of investigative techniques such as detailed data analysis, interviews, forensic technology, and evidence gathering may testify in the court as an expert witness. Using auditing based procedures with a forensic lens, verification of transactions, tracing assets, reviewing internal controls, and interviewing relevant personnel. Accounting will produce an investigative report as an outcome used used in legal or regulatory proceedings outlining findings, evidence, and conclusion, whereas audit produces a audit report focused on whether fraud or financial irregularities occurred in targeted areas. Accounting goes with the timing and frequency when triggered by the suspected fraud, legal disputes, regulatory inquiries, or whistleblower allegations. Auditing will initiate when specific fraud or irregularities are suspected in defined financial process or transaction. Accounting requires specialized skill in fraud detection, investigative methods, legal knowledge, interviewing forensic technology, and accounting. Whereas auditing requires expertise combined with fraud investigation skills, often performed by auditors with forensic training. Accounting helps to detect, investigate, and document fraudulent activities to produce and protect the organization from financial crimes. As a part of risk management role, audit will help to identify weaknesses in internal controls in specific fraud related areas and support corrective actions. As a part of legal and regulatory use, accounting supports legal cases by providing evidence, expert witness testimony, and comprehensive forensic analysis. In case of auditing, They assist in legal and regulatory matters when fraud is suspected in specific financial operation. Organizational integrity is ensured by the accountant by misconduct is addressed and resolved, restoring trust and strengthening controls. Auditing confirms or disproves allegation of fraud, reinforcing accountability and transparency in targeted operations. As a part of business context, accounting has a more common in medium to large organizations or during litigations, less common in the small business unless any major fraud is suspected. Accounting in a business context typically triggered by a specific fraud concerns, also less common in small businesses except when the issue arises. As a part of a deployment, accountants are specifically appointed to investigate the fraud cases from end to end. As a part of deployment, forensic auditors are tasked with examining specific financial records or processes to detect fraud. So, learners, I would like to end my today's session with a summary. Forensic auditors are financial detectives who analyze data to uncover fraud and quantify damages. Whereas forensic accountants are the investigative specialists who follow audit trails and gather admissible evidence for legal action. I would like to end today's session with a quote. Accountants bring order to chaos, and auditors bring truth to light. Together, they keep trust alive in every ledger. Hope the session was fruitful to you. Till then, happy learning.